Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch the stock market update and industry sector review for the week beginning Monday, April 30th, 2018. It's hard to believe that April has already come and gone. Before I get started, I'd like to jump into the quote of the week. And this week's quote is from Dennis DeYoung. Dennis DeYoung was, or is, an American singer-songwriter, musician, and producer, best known for being a founding member of the rock band Styx as the primary lead vocalist and keyboardist. He once said, "Winners are losers who got up and gave it one more try." Those are some wise words from Dennis DeYoung. Well, we have had continued volatility in the stock market. The Dow, S&P, and Nasdaq have lost a little bit of ground since the last video. And this week we have all kinds of surprises coming. We have the Federal Reserve is meeting on Tuesday and Wednesday this week and coming out with a statement on Wednesday at 2 p.m. Eastern Time, which should create some volatility in the stock market. And we have Apple releasing earnings this week, and on Friday at, let's see, what is that, 8:30 Eastern Time in the morning, we have the unemployment numbers, or I should say jobs numbers, from the Bureau of Labor Statistics for the week, for the month of April. So we have all kinds of things going on. The Dow is on a razor's edge right now, as is the S&P and Nasdaq. Rather than talk about it, let's go ahead and jump right in, and I'll begin with the Dow Jones Industrial Average. Before I begin, I would like to say that all the charts you're about to see are 6-month charts from October 30th, 2017 to April 30th, 2018. Beginning with the Dow Jones Industrial Average, you can see that the 5-day moving average in red crossed back below the 20-day moving average in blue, creating a new short-term weakness confirmation. And the blue 20-day moving average is still below the purple 50-day moving average, indicating intermediate-term weakness as well. We have been in this decline since January 26th, and one thing I'd like to point out is that the Dow Jones Industrial Average is retesting that declining tops line again. So I'm going to go ahead and convert this chart into a candlestick chart so you can see each day that this index is traded. And I'm going to draw a line here from the highs of January 26th down and touch those two prior highs and illustrate this for you. Let me get it. There we go. So January 26th, we had the all-time high, and then we came back up and touched it again, touched it a second time. So now we have 3 points touching that line. We touched it again down here at the end of April, or middle of April. We broke out for 2 days, made a little top, and then boom, we came right back down below that line again, indicating a false breakout here in this this week of trading. Then we popped our head back up again last week, and as of Monday, April 30th, we came down and we're sitting right on that line again. So this week is going to be very interesting for the Dow Jones Industrial Average, because if we continue lower this first week of May, then we're going to be back below this declining tops trend line, and we will have a second failed breakout. So we have a short-term weakness confirmation, an intermediate-term weakness confirmation, and possibly a second false breakout coming in the next few days. So be very cautious and careful with the Dow Jones Industrial Average at this time. Here's the chart of the S&P 500 stock index, and we have the 5-day moving average crossing back below the 20-day moving average in blue on Monday, April 30th. So we have a short-term weakness confirmation again. And the blue 20-day moving average is still below the purple 50-day moving average, indicating intermediate-term weakness as well. As far as the S&P 500, if I connect the highs again for this index, going back to January 26th and lining up those highs, you can see that we had perfect touches here once, twice, the middle of March, and then another touch here, the middle of April, and the S&P 500 is definitely weaker than the Dow Jones because it has not been able to break above that declining tops resistance line. It's still stuck below it, and it got rejected again and headed lower on April 30th as well. So this will be, again, a very critical week for the S&P 500. Please use caution in this particular index because it has three very weak, very bearish indicators. Two weakness confirmations and one declining tops resistance line here that has not been broken since January 26th. So we just need to wait and see, but just use caution. Here's the chart of the Nasdaq 100 stock index, and we currently have the 5-day moving average in red is back below the blue 20-day moving average since I spoke with you last on the prior video. The blue 20-day moving average is still below the purple 50-day moving average. So we currently have a short-term weakness confirmation and an intermediate-term weakness confirmation here on the Nasdaq 100. And as I said in the prior video, we may have a bearish head and shoulders pattern here developing. We've got the left shoulder here from January, the head from March, and the right shoulder here from the middle of April. So be very careful with the Nasdaq 100 because there are all kinds of potential risks involved here. We just need to wait and see how this week plays out. Right now things are looking rather bearish and rather weak, so remain cautious. Here's the chart of the S&P 500 Information Technology Index, and we have the 5-day moving average in red back below the blue 20-day moving average since the last video. So we have a new short-term weakness confirmation, and since the last video, which was recorded on April 23rd, we've lost some ground. So the short-term weakness confirmation and the blue 20-day moving average is still below the 50-day moving average in purple, confirming the intermediate-term weakness as well. So I'm not going to draw any lines on this one, but you can see the possible head and shoulders formation here again, which is a bearish situation. Left shoulder here, the head here, and the right shoulder here. So remain cautious on information technology. Here is the S&P 500 Consumer Staples Stock Index, and this chart just continues to get beaten up. It is really painful to watch this thing. Ever since the end of January, this thing has been a one-way trip downward, and its most recent drop was from the middle of April to the end of April down here. It just keeps making new lows. One low here, another lower low, another lower low, another lower low, and another lower low. So there is a tremendous amount of weakness here on consumer staples, and the 5-day moving average in red is well below the 20-day moving average in blue. So we have a short-term weakness confirmation there for the last week or two, and the blue 20-day moving average is below the purple 50-day moving average. So we have intermediate term weakness as well, going all the way back to that crossover the middle of February. So use extreme caution when thinking about the consumer staples stock index. This thing has not shown a heartbeat since the end of January. Here's the S&P 500 Industrials Stock Index, and since the prior video, we have that new short-term weakness confirmation as the 5-day moving average in red rapidly crossed back below the blue 20-day moving average, and the blue 20-day moving average is below the 50-day moving average, indicating intermediate-term weakness as well. So extreme caution is warranted here with this Industrials Index. And one of the problems that I see is that on April 30th, we made a new lower low right here. So we had this low from the early February, and then we tested it once, tested it twice, tested it 3 times, and we took off here and bounced, and then on April 30th, boom, we broke below these 4 prior lows. That is not a good sign for the industrials. Not only did it take out its 4 prior lows, but again, as the other charts I showed you, if we just draw that resistance line, we have 1 test here and 2 tests here. So the industrials have not been able to break above their declining tops resistance line either. So there are all kinds of bells and whistles sounding for industrials, so please use caution regarding this particular index. Here's the S&P 500 Utilities Stock Index, and this has been looking nice and solid for several weeks now. It's definitely the industry that is doing the best of all of them. We have the parallel trend lines that I drew in last week's video here, and it's been kind of rising nicely since early February, and we got a nice little pop here the end of April, and we're still above that top parallel trend line. So that's a pretty good sign for utilities. Not only is it trending in a nice channel here, but we got a nice pop above it, which shows a surge of strength. The last week of April, we have the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength, and that strength is increasing because those lines are pulling apart from each other. And we have the 20-day moving average in blue is above the 50-day moving average in purple, indicating intermediate term strength as well. So right now there is nothing to complain about on this particular chart. We'll just keep an eye on it, and hopefully it just keeps running the way it is. Here's the chart of the S&P 500 Consumer Discretionary Stock Index, which is also known as the cyclical stocks. And I put some annotations on here to just share a little more visual information with you. We had the all-time high on January 26th, and then we had a lower high number 1, a lower high number 2, and a lower high number 3, and it looks like that we may have made a lower high number 4. So, and that was on April 30th, or no, April 27th. So, and then we came down again a little bit on April 30th. So it looks to me like we have 4 lower highs for the Consumer Discretionary Stock Index, which is a sign of pretty significant weakness. We do have the 5-day moving average in red above the 20-day moving average in blue. So we do have a little bit of short-term strength because of the rally off this bottom here in early April. And the 20-day moving average in blue is still below the 50-day moving average in purple. So we do have intermediate term weakness here. So we have mixed signals, short-term strength, intermediate term weakness, and this particular index has gone sideways for a couple weeks. So we don't have any significant trend one way or the other. It's best to just keep an eye on it and see which way it goes this first week of May. We have the low here back in early February, and then a lower low number 1 and a lower low number 2. So we are making lower highs and lower lows, which is a very bearish sign and a very significant indicator of weakness. So use a significant amount of caution with consumer discretionary and cyclical indexes. This one's not looking very strong at all right now. Here's the Dow Jones Financial Stock Index, and we have been in a sideways pattern. It kind of looks like it's rising, but actually we have been going completely sideways since about March 23rd. So right now this particular index has no direction at all. It's just been trending sideways for almost a month and a half. And the 5-day moving average in red is very close to the 20-day moving average, but it is above it. So we have a small amount of short-term strength. But the 20-day moving average in blue is well below the 50-day moving average in purple, indicating a significant amount of intermediate term weakness. So Mixed signals here, a little bit of short-term strength, lots of intermediate-term weakness. So just use caution with the Dow Jones Financials Stock Index at this time. Here's the chart of the Dow Jones Oil and Gas, also known as the Energy Stock Index. We have the 5-day moving average in red, well above the blue 20-day moving average. So we have a significant amount of short-term strength. And the 20-day moving average in blue is well above the 50-day moving average in purple, indicating a significant amount of intermediate-term strength as well. So lots of things going for this particular index, short and intermediate-term strength. However, this particular index has gone sideways for about 2 weeks. So use a little bit of caution until it picks a direction, because we don't know if it's going to go up or down. This big surge that we had from about April 10th for about a week here took a significant amount of energy out of this particular index worth of stocks. So this could be just a pause because it shot up so fast and used up all of its energy, and it's just kind of taken a breather, or it possibly ran out of gas completely. So we need more time to see where this is going, but we do have that short and intermediate term strength confirmation. So we'll just see where we go the first week of May. Here's the chart of the Dow Jones Healthcare Stock Index, and we currently have the 5-day moving average in red is still above the 20-day moving average in blue. So we have a short-term strength confirmation coming from this little rally here over the last few weeks. The 20-day moving average in blue is still below the 50-day moving average, indicating intermediate term weakness. And considering that this particular index has made little progress over the last 5 weeks, that gives me some hesitation in assuming anything right now. One of the things that I'm looking at is if I convert this chart into a candlestick chart and I draw a line from the top up here and connect those other highs, we have a situation where we have the high up here. We attempted to make a new high but failed on this day, and then we had a test and a test here, so we created the second and third points of this declining tops line the middle of March, and then we tested that line again and then failed, and then we tested it again and failed the middle of April, and then we failed and failed again here, and we just couldn't get any traction at all. That declining tops line put up quite a fight for the second half of April, broke above it last week, had 2 up days, and then on April 30th, boom, it just got hammered and came down and stopped right on top of that declining tops trend line. So we need to keep a very strong eye on this particular healthcare index, because if the rest of the week this index goes lower, these 3 days will mark a false breakout, and that will be extremely bearish for the healthcare stock index. So right now this is on a razor's edge, and it either needs to head higher quickly, or if it fails, then it's going to much lower prices, probably down to the lows of February and April, and retest those lows again. So be extremely cautious with the healthcare stock index. Here's the chart of the Dow Jones Real Estate Stock Index, and currently we have the 5-day moving average in red on top of the 20-day moving average in blue, so we have extreme indecision on the short term, and the 20-day moving average has been parallel to the 50-day moving average for about 2 weeks now, or longer. So we have extreme indecision in the intermediate term as well. You can see that this particular index has really gone sideways for almost 2 months. So use some caution here on this real estate index, because it won't pick a direction. It just wants to go sideways. We need to see something happen before we feel better about it. If I draw a line across the tops here, you can see the resistance that we're fighting with. So this particular resistance line has had some tops here in mid-March, and then another top here the early April, and then another top here mid-April, and then again last week. So That's the line that the real estate index is fighting to get through. Meanwhile, we have a ascending line on the bottom, which is somewhat encouraging. That tends to be a positive outcome if it comes to fruition. You have this low here in early February, tested again, making the second point, and then for the last couple weeks we've tested it a few more times. So we need to see this thing either break above it or break below it in order to decide which direction this wants to go. Just use caution at this time. Here's the final chart of the day, the Dow Jones Transportation Stock Index, filled with airlines, trucking companies, and railroads. And these two parallel lines that are on here are the ones from the last video that I drew, just showing the parallel trend that this particular index is stuck in, very similar to the real estate trend. So it has gone pretty much nowhere for about almost 3 months, just bouncing back and forth with no sense of where it wants to go. The 5-day moving average, the 20-day moving average, and the 50-day moving average are practically all on top of each other. So we just have a huge amount of indecision. We just need to wait it out and see where this thing wants to go. It either needs to break above this top line or break below the bottom line, and then we can have a sense of, okay, that's where this thing is headed. Right now, just use extreme caution because this thing doesn't have any strength or weakness. It just simply wants to go sideways. Thanks again for watching this stock market update. I hope you found the charts and information useful. Before you go, please do me a favor and hit the subscribe button on this YouTube channel and click the little bell next to it so you will be notified whenever additional videos are posted. In addition to that, in the summary description of this YouTube video, you will find links to the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. If you use any of those social media tools, please visit those sites, and while you're there, click the like or follow button, and that way I can communicate with you throughout the week using social media. Well, have a great day and a great week, and enjoy the month of May. Talk to you soon. Bye-bye.